In this video, we will learn how to prepare a basic statement of cash flow using the direct method. So first of all, I need you to get your textbooks, and I would like you to turn to page 686. So page 686, and we're going to take a look at brief exercise 13-3. As an alternative, you can pull it up your textbook onto WileyPlus, and you should be able to find brief exercise 13-3 under chapter 13. And the following T account is a summary of the cash account of Wigman Company, and you'll see that it has the beginning balance plus all the increases in summary format to the cash account over the course of the year, and all the decreases, which are outflows to the cash account, and we have our ending balance. So if we take our beginning balance plus all our increases, which are our debits, and we take subtract the sum of all of our outflows, which are our credits, we should get the ending balance as of December 31st, which is $496,000. Now you should have a sheet of paper, and we're going to begin to prepare our statement of cash flow. Now, the first thing you'll need to do is do a heading like you do for the first three financial statements: income statement, retained earnings, and balance sheet. So the name of the company is what we're going to list first. Then we'll list either statement of cash flows, or you can do cash flow statement. Either one will work. And then for the year ended December 31st, 2015. You want to make sure you have for the period, for the quarter, for the month, or the year to indicate that this information is for a beginning point and an ending point. Now what I have here on the side is kind of some summary notes that you might want to jot down as you complete your homework in WileyPlus. But the first one is operating. This is the first activity that a transaction can be classified. Then we have investing, and then finally financing. Now to kind of remember the order, I came up with an acronym OIF. O if I could remember what belongs on the cash flow statement. So the O, operating, which relates to any items that can be found in net income, such as revenues and expenses, any changes to current assets or current liabilities, excluding the note principal. Then we have investing, which includes investments and changes to our long-term assets and changes to any possible principal for the notes receivable. And then the financing, sources of how we finance or where we get our money from, either through our owners in the form of equity, and the other source will be our creditors through the form of long-term debt. And then, of course, we want to include the principal as it relates to notes payable, because that's also a way we can finance our operations. So operating, investing, and financing. Now you will list your operating activity first. So the first thing you need to write down on your paper underneath the heading is cash flows from operating activities, colon. And what we're going to do is figure out what items need to be listed under the operating activities. So to do that, what we're going to do is go back to page 686, and we're going to see where did that 364 come from. It came from receipt from customers. So that would relate to revenue. So that's relating to operating. So we're going to go ahead and put that O right next to it. Now the 6,000 related to dividends on stock investments. So this is dividends that we receive as a investor or shareholder. So because we are receiving the dividends, this is revenue towards us. So the dividends themselves, dividends revenue would be a part of the net income. So that's actually considered operating activity. So we want to put an O there. And then the 36,000 comes from proceeds from the sale of equipment. So selling our equipment that we're using. So that would be a change to our long-term assets. So that falls in our green category, which is our investing. We're going to go ahead and put an I next to the 36,000. Now the $500,000 represents proceeds from the issuance of bonds payable. So bonds payable is considered long-term debt, and that's under financing. We'll classify that as an F, financing activity. The next item would be all of our outflows, and this is what? Payments for goods. Think of cost of goods sold. So we're buying goods to resell to our customer. That is an expense to us. So that would be considered operating activity. The 140 represents payment for operating expenses. That's pretty simple. Expenses are using the word. So operating, we're going to go ahead and put that down as an operating activity. And the next we have interest paid and taxes paid. So we're paying for interest expense and we're paying for taxes expense. So both of those would actually be operating. So the $10,000 and the $8,000 are both considered operating activities. And the last one says dividends paid. Now, when we pay dividends, what we're actually doing is we're giving our owners a return on their investment. So that's actually coming out of equity. So because that's coming out of equity, that's actually considered a financing activity, so we're going to label that with F. Now there's no need to label the ending and the beginning balances because those are just calculations based on the various postings to the cash account. So now we're ready to actually start listing our items. So the first item we're going to list all the O items. So the 364 will represent, let's see, receipts from customers. And because it's positive, it's an inflow, we're going to put that as a positive number. So the debits are going to be inflows, and the credits will be outflows. Next we have our dividends received. Oh, wrong place. Dividends received goes under our receipts from customer. And that's an increase to our cash. And there's no more inflow, so let's go to the $200,000. That comes from a payment of goods. So what do we have? Payment for goods. That'll be a negative. So this is an outflow. We're paying for it. And it's not showing up. So let me go ahead and make it a little bit bigger. And then next we have our interest paid. No, I'm sorry, payment for operating expenses. And again, that's an outflow, so that's negative. 140. And then we have our interest paid, $10,000, and taxes paid, $8,000. And that should take care of all of our operating activity items. And what we want to do here is sum these itemized activities. So we're going to do equal sum, open parentheses, and then just highlight a range of numbers to add up. And you should get a positive 12,000 for net provided by operating activities. Now, if this number were negative, then it would be used by operating activities. Next, we will do our investing. So, if we're on the I now, and we only have one investing activity, and that 36,000 inflow is from the proceeds from the sale of equipment. So we are receiving that. It's coming in, increasing our cash, so a positive $36,000. And since we only have one item, we're just going to go ahead and reference that 36. And I'm putting it right underneath the 12 because we're going to add these numbers up once we figure out our net from our financing. So this is net cash provided by investing activities. And then we're ready to do the financing. Financing would be proceeds from bond issuance. So this is when we borrow the money. So when we issue these bonds, we're actually borrowing the money from our long-term creditors. So that's going to be an inflow of $500,000. And then that last F relates to the dividends paid. So we're going to do dividends paid. And because we paid something, we're going to see a decrease to our cash. And if you take the 500 minus the 600,000, the net of that, adding these two together, you'll get a positive 440,000. So what we'll need to do next is calculate the net change in cash. So taking our three nets from our operating, investing, and financing activity, we're going to do equal sum and just start from the highest number and go down to the lowest number, press enter. So 12 plus 36 is 48 plus 440, that gives us $488,000, and that is the net change in cash. And if we go back to our beginning cash of $8,000 and we add our beginning balance plus the net change, because it's positive, it's a net increase in cash, that should give us our ending balance. So we're hoping that we agree to what we have in our cash balance, and it does, the $496. And there are no significant non-cash items, so we don't really even need to include that. Well, we're done. We prepared a basic cash flow statement using the direct method, and then we make it a little smaller so you all can see the entire cash flow statement. And our ending cash agrees. So if you have any questions, please post in the discussion thread. That concludes this video.